Hey, everybody, welcome back. Welcome back. I'm going to do a video today doing a trade review of my 12 trade winning streak. I think it's 12. I'm not exactly sure. We're going to get to that in a minute. But before I jump into that, I want to do a really cool video that I think I've been wanting to do it for a while. And so just bear with the first 5 or 10 minutes of this video, and I promise you we'll get into some trades. But stick around because this is really cool. As you guys may know, I'm also a semi-pro poker player. Um, and when I play poker, I play live poker. When I do, I come across a lot of young people. And a lot of millennials lately have been playing a lot of live poker. Young, uh, young millennial men mostly, but there are some women. But in any event, as I get to know these people, I get to see what the younger generation is thinking, how they're thinking, and obviously conversations about the economy and the stock market always come up because everybody in the poker room that I play in knows that I'm a trader, I think. There's one guy in particular, his name is Mike. Really like him. I think he's a very, very good player. Have a lot of respect for him, and he's generally a really uh, decent guy. But the reason I'm talking about this is that I see a lot of young people that have kind of come into the financial workforce or into the financial space over the last 12 years, and they have an idea of what the economy is like, and they think that the last 12 years have been very normal and that things are going to continue to be like they've been the last 12 years. But the reality is that we are living in incredibly unusual times. And so a lot of the younger people have this belief that, kind of buy and hold is the way to trade the stock market, right? If you they look at investors like Warren Buffett, they look at all these longer term investors, and they think if you buy something and you hold it, you're going to be fine. Now, in the last 12 years, there might have been some truth to that, but the reality is that's just a temporary situation, and it's not the history of the stock market. And I'm going to show you some data and some facts here. And again, stick with me because it's going to be really cool. And we're going to get to some actual trading and some of my actual results. Buy and hold is only great when you're able to buy value. Let me repeat that. Okay. Currently, right now, there are approximately 7,000 publicly traded companies. Okay. Now, what you're looking at here on the screen is from Fred, which is the Federal Reserve Bank of St. Louis. And they're showing you from 2017 uh, back to, in this case, to 1996. There were 30,000 listed companies in 1996, and now there are 13,000. So where did those 17,000 companies go? Right? Where did they go? They're gone. Okay. Now I'm going to give you a little bit of perspective here. Here's a list of the since 1957. Most people don't understand the S&P was listed in 1957. Um, these are the lists of since 1957 that have survived. So out of the S&P 500, which is supposedly the top 500 companies in the U.S., um, only 86 of them have survived. Where are the other 443? They're gone. They've evaporated. Okay. And if you even look at the 46 that survived, you can see that really maybe only Colgate, Chevron, Campbell's, and Bristol Myers are even relevant today. The rest of these companies are all trading at horrible price earnings multiples. So, had you had invested and held in individual companies, there's an extremely high probability, 50% probability since 1996, that your company wouldn't even be listed anymore. And if you had bought the top companies in the S&P 500 since 1957, I don't see Apple, I don't see Amazon, I don't see any of the big flying names. Yes, I'm not saying you wouldn't have made money on some of these names. Of course, you would have made money on some of these names. But buying individual companies, you have to be really smart, okay? And you have to really understand that what value is and how to buy value. Because if you buy companies that are overvalued, which I see so many young people doing, it makes me want to slap them silly. They're buying these overvalued companies with the attitude that they're going to average cost into them. And they do not understand that history is going against them. They basically have a 50-50 chance. Now, the argument is, well, I'm going to buy dividends, right? Well, okay. Now, if we go and look at some of these companies that still exist, I'm sure pretty much all of them still pay dividends. But what about the ones that don't exist anymore? And how many times, um, you know, in order for dividend investing to work, you still have to buy value. You can't buy at all-time highs, people. Please, I beg you, for God's sake, stop doing it. And I'm not saying that anybody in particular. I'm not saying this one guy, Mike, is doing it. He's doing his own thing. But I'm trying to educate young people in general because I come across this all the time. This notion that the stock market is safe and the stock market is an easy place to put your money. It's not. It's not. There are statistics that prove that 98% of traders and even investors fail. Okay? And if you look at the number of companies that gets delisted, you would understand that. Now here's the Nasdaq. Here's a given day on the Nasdaq. You can see here's a given day of companies that were suspended or got delisting or notification suspensions. Okay, it's like this is a one day release, and you can see there's 20 companies on here, right? So please, for God's sake, young people, do not think that the stock market is a safe place to put your money. It is not. Can you occasionally get lucky and buy Apple at good value, buy Amazon at good value 10 or 12 years ago and be making lots and lots of money? Absolutely. But finding those companies, finding the next Amazon and finding the next Apple in the 13,000 or actually 7,000 companies right now that are up and coming in new IPOs and everything like that, that takes great skill. Okay, so please stop buying at high valuations. Stop thinking that this is going to continue forever. Stop thinking that what you see in the last 12 years is normal. It's not. Okay? It's just a Fed-induced market. The reason why this is not continuing on a down slope since 2009 and it's not continually down is because the Fed has pumped in literally $8 trillion of money and stimulus to keep bad companies that are badly managed, that don't make profits, to keep them afloat. So that's the reason why this isn't even trending down worse and looking worse, okay? So what you're seeing is not normal. If you're going to trade in the market, get educated, learn how to find value. Okay, there's my rant. over with. Hopefully you young guys will like that. Now let's get into some actual trades. Um, if you go into my room, this is a free room, by the way, if you don't know who I am. I have a free room here, and I do some day trading and swing trading in here. And you can see this is witnessed by 15,200 people. And my room profits in this room has been open for approximately 19 months now, are at 212%. Now, every trade that I take is time stamped, and my entries, my stops, and my exit are also timestamped. You can go back and take a look at that. So what we're going to do is I'm just going to review some stocks that I traded this week, because I had an outstanding week trading some penny stocks this week, mostly day trading, and we're going to talk about those and go through some charts here and have some fun with that. Okay, so let's start off here now. First of all, what I want you guys to understand is that what I teach is how to find value. That's what I teach. That's my whole education. Now, whether you're a long-term investor, whether you're a day trader, whether you're trading options, whether you're trading Forex, whether you're trading the S&P 500, whether you're trading penny stocks like I traded this week, finding value both for long positions and for short positions is the key to all trading success. As a matter of fact, it's the key to all success in life. Again, if I held any of you young people with me, hopefully you'll take advantage of my 58 years on this planet and understand that what I have learned in life is the people that are successful, number one, have timing going for them. That is the most important thing that you need to have going for you. The number one thing for success, timing. But what is timing really at the end of the day? At the end of the day, timing is finding value, isn't it? Right? Because if you got in on Amazon, 8 years ago, 10 years ago, you saw value where other people didn't see value at a low price. Okay? So whether you're day trading, swing trading, or investing, you've got to know where value is. You've got to be able to look at an asset, and no matter if that asset is moving on a 1 minute chart, or that asset is moving on a 15-minute chart, a daily chart, a weekly or monthly chart, you've got to know where value is. You can't overpay for anything ever. That is the secret to success in life. Okay, and I see so many traders in StockTwits and in these forums, and they have no idea that life is, you can't overpay for things for very long and get away with it. It's just a matter of time before you get demolished. Okay, so I find value. Okay, now here's a stock I was watching on Friday, PSB, and I said I really want to short this stock. This was on my short list, as you can see over here. I had it to short, but I said I wanted to watch it at 2. When it got to 2, I didn't see what I wanted going on there. And to be very honest with you, see this big gap? The stock kept getting halted, right? And I didn't want to get involved in it, in the halts, because you can't really see, it's kind of showing here. It just kept getting halted. And I didn't trade it. When it got to 3, I called it out again in my floor trader room. But I still didn't trade it. It ended up coming off to $1.50. Would have been a great trade, but I just talked about that one. Where did I make money on Friday? So Friday, I made some really good money on Retro. Okay. Retro, as you can see here by my red symbol, this was all posted in my room, was a short. Now, why was I shorting Retro? Because on a higher time frame, there was value in me shorting it. Okay, there's my higher time frame. I can go into a daily chart. That was short value. Okay, that's the bottom line. That's what that is. This stock has been being sold off like crazy, and that's where value for a short. The stock is one of those stocks that's probably going to go to 0, but it was value. Okay, so on a 1 minute chart, I had this as my number 1 pick on the day, this and WAFU. my number one short chart here, I got short here on this jump up here. Now, if you go and look at my chat in the room, I got a really crummy fill. I wanted to get filled at 190 or 2, and I had resting orders sitting there at 190, and I got really bad slippage. It was horrible. I think I filled at 175. You can go read it in my room. It was all there. And unfortunately, because I got bad slippage, I was not able to manage the trade as safely as I wanted to manage that trade. But it ended up working out really nice. I took profits. I could have rode this probably down to $1.32, but I got I think I got like 3.5 to 1 on my money. So I risked, for every dollar I was risking, I made $3.50 on that. Okay, so great trade. What else did I trade? Wafu, hard to remember here. Okay, let me just go and look at my room. I don't ever remember what I trade, guys, as soon as it's over. But as you can see, I've had 12 winning trades in a row this week. Wafu. So Wafu was really expensive, okay? But there's a really cool lesson here on Wafu, and I want to share it with you guys. So if you've stuck with me this long, congratulations, because you're going to get some real gold. So Wafu is how I'm going to teach you a really cool way how market makers take advantage and burn retail traders. So Wafu, I want to show you this right here. Did everybody see this little behavior on Wafu? You see how we come down now? Retail traders call this a cup and handle. Did everybody see that right there? This is called a retail traders. These are why retail traders, they're focusing on these patterns. They're focusing on these nonsense. But this pattern created a lot of liquidity that the market maker was going to use to run those stops, because the market maker knows this stock is worth about $4 a share, and he wants to short it, but he wants to suck you in. So when this pattern creates this cup and handle that these retail traders trade, what it did, it was created a boatload of liquidity below the market down here. Why did it create that liquidity? Well, let's talk about that for a second. So you have these retail traders that buy here on this breakout, that bought this cup and handle. All of that volume that took place in here, that buy here, the market maker now created a liquidity pool that he can now use down below the market. So what happens is that once the market maker can get all of these longs upside down, what do I mean by upside down? Get these longs into a position where they're going to lose money and panic. And you can see it right there. So let's put some volume here. You see that little volume spike right there? All this volume that comes in here. You know what that is? That's all of these buyers over here panicking. Okay? So once the market maker can suck in, and he's getting short all through here. Okay, that's him getting short. Why? Because he knows that you're looking at that retail trader pattern. He knows that's a cup and handle, right? And he's creating all this liquidity right here, allowing him to get short only for him to cover over here and make profits. Do you understand? Retail patterns do not work. Okay, they do not work. There's only one thing that works in trading: finding effing value. Okay, you've got to know where value is. Okay, now, so this was a really cool trade that if you've lasted this long in this video, please give me a shout out. I'd like to know who lasts. I'd like to know if people actually watch my videos this long. I'm trying to keep them down to 10 minutes, okay? So this was another really good trade here. So if you watch this video this long, say, hey, Steve, thank you for sharing how market makers screw us over. And I'm gonna keep watching your videos. If you tell me that you're doing it, I'll make more videos like that. If you don't, I'm not gonna waste my time. Okay, so there you have it. So it was a really good day on Friday. The rest of the week, We're going to talk about one other trade that I did that I think has some relevance here, and that's AHIS. And AHIS, that was a really cool trade. I want to share it with you guys because it was absolutely wonderful. Absolutely wonderful. So, AHIS on Wednesday had this big gap up. It was on my sell list again. Go check in my room. It was all there. You can go back and check it out. And AHIS, and once they had this big gap up, it was on my short list. Now, I actually did short AHIS. I got short here on AHIS and I covered it for just a small profit. Now, why did I do that? Well, I want you to notice the volume that was taking place on AHIS. AHIS had an $11 million float, 11 million share float, and it had traded like 60 million shares, maybe even more. I don't remember exactly. It might have even been like 100 million shares. So it had turned the float over like an insane amount of time. So why is that a bad thing? Well, because that's a bad thing because it now becomes a guessing game. Are those new buyers or are those new sellers? I don't know, right? Now, I wanted to short it because it was at value for the short side, right? It was definitely at value for me to short that. And I wanted to short it, right? But I couldn't be sure at the time on when this was happening, when those 50 million shares came in. I couldn't be sure if those were just new sellers or new buyers, right? And it was going to take off to 10, 11, 12. You got to be careful with this. The stock only has 11 million shares in its float. It's trading 100 million shares, which means that if these are new shorts and the market maker can get these shorts upside down, this stock could go to 10. Because that 50 million shares that we're trading, if these guys get upside down, what do you think is going to happen? They're going to be forced to cover, and the stock is going to go to 5, 6, 7. So, to my eye, this was really more of a gamble than anything, and I just covered the trade. Now, obviously, I was kicking myself in the ass, but I couldn't have been sure at that point in time that was new sellers. And it sold off all day long. And I was upset. I could have made quite a bit of money on that. I could have got close to a 5-to-1 risk, a 1-to-5 risk to reward on my money on that trade instead of just making a little profit. But here's the beauty. Sometimes patience pays off. So the trading gods were very, very gracious to me because the very next day, it popped straight back up. Look at this in the pre-market on light volume. Now, when I knew that was all sellers and we get at better value, this was such a beautiful trade, and I absolutely crushed this trade, got short, because now I have more information, right? I have more information. I have much more information, and what we actually trade when you're trading, guys. What you're trading is, the more information you have, the better it is. Okay? So you can go and take a look at every other trade that I did this week. Again, it's all time stamped. And you can see how I had an incredible week. I think I net about 10% total for the week. Everything's there, time stamped. Feel free to shout it out. I've even put some examples of some trades here with some actual pictures that you guys can look. DDS, there you go. I show you where I got in, where I got out. So hope you guys really enjoyed that video. Sorry, it's a little bit longer than I wanted. But if you lasted this long, again, give me a shout out. Say, hey, Steve, we love you. We want to keep seeing more of these videos. It will inspire me. Remember, also, please like my videos so that it can go viral. Also, we're doing a summer special. Quickly, I'll do a quick plug where we're offering a summer special on the website with some really good prices. The algo's $275. The videos are 1,000. The group coaching, great value, $1,300. My one-on-one coaching mastery has never been this low before. Okay? If you like what you see, say hi, or even better, go buy one of my products and I'll teach you how to do this for yourself. Thank you all. Love you all. Bye for now.